This has been an Obsidian Mortgage Corporation production. Your choice for real estate, investment, mortgage, and finance news. Obsidian Mortgage Corporation and One Journal proudly presents your host, Richie Riches, and your Mortgage Matters.
Thank you, everybody, for listening to this podcast. This podcast is Your Mortgage Reel, and I'm your host, Richie Riches. This podcast episode is brought to you by Obsidian Mortgage Corporation and is a One Journal production. And in today's show, the Mortgage Reel, we're going to be discussing the update in the state of affairs in regards to Canadian real estate, as well as revised mortgage stress test details. Once again, Mortgage Reel is an editorial podcast brought to you by OneJournal.com and sponsored by Obsidian Mortgage Corporation. And as I mentioned just a second ago, we're going to be discussing Canadian real estate highlights, updates, and forecasts. All the data that we receive, all the national market stats that we use are provided by the Canadian Real Estate Association, CREA, as well as Toronto Real Estate Board, TREB, and the Canadian Mortgage and Housing Corporation, which we refer to as CMHC. Today, when we're discussing Canadian real estate, we'll be spending some time on the current national outlook on prices and trends affecting the national market, and we'll be taking a provincial look on the prices and trends within Ontario, and in more particular, the GTA. So that being said, let's get into it. And when we do get into it, according to the Canadian Real Estate Association, things are looking very strong for 2021. In fact, the national outlook is looking at prices raising an increase right now, March to March, year-over-year increase of about 16.5% in house prices. That's nationally. And when we look at that, basically in the quarter forecast that they dated March 15th, they predicted strong levels in activity throughout 2021, basically citing low inventory levels and the fact that even before the COVID lockdown, the markets were at a 14-year low in real estate listings, and that the pandemic has actually further exacerbated this shortage issues in supply that they've been facing. In regards to the demand side of the Canadian real estate market, CREA also indicated strong immigration numbers over the last several years prior to 2020, and middle-aged millennials in part have led a strong demand and desire for real estate, and that this desire was actually quote-unquote supercharged by the limited supply and the restrictive year that was 2020. This led to even stronger than typical demand for one to want their own space, whether this meant a bigger backyard or more spacious property, and in fact contributed to the overall excess of demands. Not to mention the fact that mortgage rates also are still very much at historic lows, and with Bank of Canada deciding, and understandably so, their desire to keep rates low throughout 2020 and 2021, the continual escalation of demand in Canadian real estate sees very little end in sight. National prices are forecasted to spike 16.5% nationally in 2021, with what CREA notes as a seller's market in almost all local markets, with Ontario being cited as a real potential hotspot for real estate values, as the inventory, or should we say lack thereof, inventory and listings are becoming a major concern in values that are poised to skyrocket during this year and leading into 2022. When looking at the Toronto real estate outlook from the Toronto Real Estate Board, pretty much it seems to be a general consensus that real estate values are predicted to increase over 2021. In terms of Toronto real estate, as we're looking at it right now, currently resale home values are up 22% year over year, and the number of sales versus 2020 have doubled. So we have more sales taking place. We have a higher value, 22%, but still demand is really overpowering supply at this point, which from my understanding, they have like weeks worth of inventory rather than months worth of inventory, which is usually the case leading up to 2018. So now at this point, the real estate industry right now is really facing a huge shortage of supply. And I don't know at this point what the government's intentions are in regards to finding ways to, add to the supply to hopefully substantiate and satisfy demand. But definitely something that I'm sure the governments are looking at with a keen eye in trying to sort of figure out the best way to approach the real estate market. It's kind of a catch-22 because, at the same token, you want to find a way to make prices reasonable for those first-time home buyers that have just got their new jobs out of university and college less than 2 years and looking now to buy their first home. But the challenge really is supply, as, if you don't have enough homes, values ultimately will go up. And here's take a quick look at the housing market stats. These are the graphs that we use from TREB in regards to the current state of affairs. First chart is showing you the MLS sales, which again is showing you the month of March, and you can see where sales have actually doubled since last year this time in March, the month of March. Then you also have the housing average price increase, which is showing you again that graph is going only in one direction. It's not going down, it's going up, as well as the resale home price, which, as I mentioned earlier, has gone up 22% year over year. In other news, OFSI, the Office of Financial Services, and basically the regulatory body that governs banks and some non-bank institutions, as well as any mortgage lender that gives out CMHC insured mortgages or conventional mortgages under that banner, they're revisiting the stress test that they did, and it turns out that it looks like they're increasing the actual qualifying rate for uninsured mortgages from the 4.79 that we currently have to 5.25. This increase should be effective, I believe, May the 1st, 2021. And I'm assuming the thought is that they're doing this as a measure to try to slow down the aggressive pricing that we're seeing here in 2021. And it's an attempt, to bring the affordability issue. The higher that stress test goes, the harder it is in terms of affordability to buy and purchase a home. So, although it might be seen as an attempt to somewhat slow down a very aggressively, increasingly hungry market, I wonder how it will affect the new people coming in to buy a home who now need to have more money annually to afford a home. And, I sort of wonder, too, in regards to the qualifier itself, if we're at rates right now of 1.99 and 2.05 on a 5-year, what's the chances of rates going to 5.25% in the next 5 years? Thank you for joining me, and I'm glad you could be a part of it. If you have any questions or concerns, any feedback whatsoever, you can feel free to send me an email at richieriches@onejournal.com. I'm always happy to get feedback, and maybe I'll even use your feedback in an up-and-coming episode. But again, this is Richie Riches, and this has been your Mortgage Reel, brought to you by onejournal.com and Obsidian Mortgage Corporation. This has been an Obsidian Mortgage Corporation production.